Markets with May. And today we are going to be talking about Coinbase. I'm short. I'm going to go ahead and disclose, but I actually have it a little bit farther up. I didn't end up buying puts because I was really nervous, given how aggressively it traded down first thing in the morning. And I think this actually takes this news today, in fairness, whether you're long or short Coinbase, is going to take some time to absorb. And it's going to take, I don't know how long it's going to take to absorb it, to be honest, but we're going to go through it. I'm going to go mostly through the SEC press release. I'm not going to talk so much on the fundamentals of Coinbase, except where it's relevant, because what I want to do is try to help people read through this press release, which is kind of nuts. It's really, really a strange release. Okay. Past performance not indicative of future returns. I already told you I'm short, so I definitely have a bias, but I'm gonna do my best to try to say this in a way that's more neutral, because there actually are some, if I was to play my own antagonist, there are some things where I would be kind of off. So we're gonna talk about it. Okay. Let's see. Let me go ahead and get into it. There's a couple things I want to say that I think can get a bit confusing. The first is that a lot of people that are supporting Coinbase right now are saying, hey, you should support Coinbase because this is the SEC's attack against crypto. But I want to tell you, even before this, there were so many people, especially when I go to conferences, that felt strongly that Bitcoin is pure. A few other things are pure, but all of these exchanges, or quite a lot of the exchanges, I don't want to say all because I haven't seen all exchanges. Quite a lot of the exchanges are the opposite of decentralized finance. They're actually centralized finance, and Coinbase is probably one of the worst of the perpetrators of that. Hence, there are absolutely a lot of crypto people that do not agree that Coinbase being asked to go offshore is necessarily good, bad, or otherwise. Now, that's kind of its own thing. And I know some people are going to probably hate on me for that, but that is what it is. And it's not really a point of dispute for anyone out there. So it would be strange. Now, the second thing that I want to go on and talk about is this idea of, well, if the SEC, does that mean it goes bankrupt or whatever? No. And this is where it becomes interesting on valuation, but also you kind of have to understand why the SEC feels the way it does. And that is this idea of being onshore versus offshore. You do whatever you want offshore. I don't care what you do. But if you do it onshore, you got to actually follow the law. And that's where I think people get really intense, is whether or not these guys understood the regulation. And I tend to, for whatever reason, side with the SEC. They freaking knew. Okay. I'm just gonna call it what it is. So I'm gonna walk through what the SEC claims that they would like to do or see or what have you. Okay, let's go through it. So let's see, on this, I talk about onshore versus offshore. You still have the potential for an offshore business to do just fine. And then it's, certainly Binance is offshore. The reason it matters ever so slightly more with Coinbase is Coinbase has about 40% of its customer base in the US. That is just not the case for Binance. Okay. So Binance getting sued, painful, not pleasant, doesn't change very much with Binance. It really affects Binance US. Coinbase getting sued, bigger deal. Okay. If you're, let me take this off of share for a second. If you are a client of Coinbase and are like, man, I don't care, I'm going to support them, I'm not moving my assets, is what it is, then learn to use a VPN, because you can absolutely do it that way if you must and if you would like to. And quite frankly, if you're directly investing in the coins themselves, you should probably think about a VPN, and you should actually also learn about cold storage and all of that stuff. Go big or go home, in my mind. Otherwise, just stick with the ETFs if you want to get that kind of exposure, things like BITO, et cetera, which I've been constructive on at different times. All right, so now let's go through the actual release. Sorry. Okay, the SEC charged Coinbase Inc. and with operating its crypto asset trading platform as an unregistered national securities exchange, 1, a broker, 2, and 3, a clearing agency. The SEC also charged Coinbase for failing to register the offer and sale of its crypto asset staking as a service program. Okay, let's break that into two pieces. We're just going to go through the first 3 things that they should have registered and all of the nuances about that. Okay, so clearly if you're not Coinbase, you wouldn't be having all of those businesses all together. They would be separated. And they're separated because over the history, since the Securities Act was founded originally to now, those businesses, when they're attached to each other, make it very easy for you to be a crook. I really don't know another way to say it. Now, I'm not saying that Coinbase is doing anything negative or bad or whatever. However, what we're saying is that we in the US require separation of those three because our history with when they're not separated is that people do stuff that is not in the interest of shareholders. Things like taking whatever mark you want, things like selling securities that don't actually exist. We all have that problem with the short sellers right now. For a lot of folks that, follow my Twitter, I talk about it all the time. And I've talked about it here as well. There's all kinds of stuff that is not okay that is done when those three businesses are together. Additionally, if they were, because they're not regulated by the SEC, and in a lot of ways, there is a fairness to people because they're not regulated by the SEC also doesn't look through everything and make sure that it's being done correctly. So even if they were separating those businesses, which could mean that you just physically like Binance US in theory is separated from Binance, the parent company. Probably better example, FTX, Ledger X was completely separated from the international FTX business. That's why everybody got their money back as relates to Ledger X, but got hung pretty much on anything that they had at FTX International. Okay, so FTX unregulated, Ledger X is regulated by the CFTC, Coinbase not regulated. That's what we're really talking about here and why the SEC is all up in their grill today. Okay, now let's go back and let me show you what I mean by you could, even if you kept a couple of these business, separate this. You can have an exchange and a clearing agency. No one has really at this point an exchange, a broker, and a clearing agency, okay? The exchange, like for example, ICE International. Sorry, I don't know why I said it that way. ICE, Intercontinental Exchange. I don't know why I said it this way. ICE does a lot of the metals and the such, right? They also clear. They have ICE Clearing Corp, and so they're separate entities, separated, and then full look through to the SEC. That's the deal. That's what would need to happen at Coinbase if they were to become compliant. They could have, every single earnings call, guys, they have said when people have asked them, hey, you got to separate that business? Every single one. They've been kind of like long answer, but really, if we were to summarize that long answer, no, we're not going to do it. Okay. And so that's kind of the issue that I come back with. Hey, I'm not into it, right? So hopefully that clarifies, but you can see here, I put some of the exchanges on there. None of the broker dealers are an exchange, by the way. I mean, you'd really have to look because some of the commodities and some of the smaller, you might, especially in fixed income, some of the very specific things people do kind of looks like an exchange, but really not quite. The clearing component of that exchange, or the clearing of it still is separated. So just realize that it's these three separate businesses, each regulated a different way, each have look through to the relative relative reporting organization. So SEC goes over to the SEC stuff goes to the SEC. The Chicago Board Options reports to a couple different people because of the nature of the things they do, so on and so forth. So the SEC alleges that Coinbase intertwines all of these services together, and that is just true. And that they should have registered these functions with the commission as law required. Okay. Now, Coinbase is probably going to say, hey, we've been in discussions with you to do that, but because we weren't getting clarity, yada, yada, you still should have registered. It's really what it is, so that kind of is what it is. I'm not a lawyer. If this continues on and becomes a really interesting case, then we'll try to find a way to get a lawyer for you. But that is kind of the deal there. Now so that's the first paragraph in that press release. And the press release says some very specific things that really relate to what this is what Coinbase does. It is not disputed. It is on their website. It is in their 10K, which is they provide a marketplace for buyers and sellers, and it's non-discretionary methods under which orders interact. They engage in the business of making security transactions. Now, this one, they're going to say it's not securities because it's crypto, so we're going to go through that. 4 accounts of Coinbase customers. And the third one is they provide facilities for comparisons of data respecting the terms of settlement, yada, 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 yada. Okay. Now, the real key thing here, because if you're not a security, then you are not regulated by the SEC. For example, Ledger X ended up being regulated by the CFTC, but they weren't offering things, or they weren't trading things. Apparently, I don't know everything that was on Ledger X, but most of what they were doing in theory was not security based, or at that point, Gary Gensler was doing other things with his life. He wasn't necessarily coming at FTX. So the real key thing that people are getting excited about is the idea that they aren't dealing in securities. And I'm like, that's a joke. Okay. That's actually a joke if you think these things aren't securities. The rule for being a security is this thing called the Howie Test. It has existed for a long time. I'm about to go through that in a second, but let me just make sure that I get through a couple of these other things. Okay. Oh, yeah. As alleged in the SEC's complaint, Coinbase failure to register has deprived investors of these protections: inspection by the SEC, record-keeping requirements, and safeguards against conflicts of interest, among others. Okay, a lot of folks are like, I don't trust the SEC, girl. I don't think those 3 things are realistic or helpful or whatever. That's probably because the regular markets have them, and you don't notice that these functions are being done via record keeping or otherwise. And then when the SEC then charges or goes after them, they're using the records that these broker dealers provided in order to do it. And also some of the compliance function is done in advance of some of that stuff happening. So that's kind of what I would say on that. But I understand how you feel that way. I won't go too hard on that, but let's see. Now the next parts. In particular, now there is another document. I haven't had a chance to review it entirely. All I did was review this SEC press release that came out. But here is the paragraph in the press release. The SEC alleges that since 2019, Coinbase has been engaged in unregistered securities offering through staking as a service program, which allows customers to earn profits from proof of stake mechanisms of certain blockchains in Coinbase's efforts. Through the staking program, Coinbase allegedly pools, that's important, each type of customer stakeable crypto assets, stakes the pool to perform a blockchain transaction and transaction validation services, and provides a portion of the rewards generated from this work to its customers whose assets are a part of the pool. And they didn't register this. Now, proof of stake, I'm going to go through this vocab because unless you have been deep in the heart of crypto, you may or may not know what proof of stake is. I'm going to try to keep it as simple as possible because there's a long history of it. And I thought about this hard to try to figure out how to suggest it. So first, proof of stake. Proof of stake, if you think about it with crypto, this stuff is all online. And then you have to prove when someone goes to unlock the blockchain that that's the right person to do it. And they do it through a number of different ways that are often called the algorithm or whatever. Don't worry about that. What's happening is there is this way of doing it called proof of stake, where whoever is willing to post the most coins wins. And so what happened, so just try to keep that in your head. Whoever posts the most coins wins. And so what proof of stake looks like is actually a validator, which is actually a legit job because you do get paid for proof of stake, for that action of proving that that's true. So a validator, the one that wins is the one with the most coins. Okay. Now, what did Coinbase do? Because they actually broker and sell coins, they then advertised to everyone or suggested to everyone on their website, hey, do you want to make a little extra something off of proof of stake? And so then they collected all of that together and then offered it to the validators who rented the pool and offered fees in exchange, right? So the validator is making money for proving the stake, and then he's giving everybody in the pool a percentage of that revenue. Let's call it what it actually is. It's not interest, it's revenue. That's the issue. Okay. Now, how is that the same as offering a security? All right. Turns out there's this little rule called the Howie Test. And I'll put this little map here because ironically, Howie in the Hills, which J.W. Howie, who was the guy that it was SEC versus W.J. Howie, He's actually from a city that is called Howie in the Hills in Florida. And if you look at this little swamp beneath that, that's where I grew up. So strangely enough, I actually do know this case really, really well. Anyways, so what happened was this dude, WJ Howie, this whole area in Florida, used to all be orange groves. When I was growing up, orange groves, that's what that whole area was. And then as time transpired, as El Nino, et cetera, no longer are there very many orange trees. But back in the day, this land was perfect. The climate was perfect for growing orange groves. But the land is swamp. So you're not going to build a house on top of it, okay? For the most part. If you are, you're going to build it on very specific places. Also at that time, oranges were a really good income. So what WJ Howie did was he basically bought the land and then resold it to a bunch of investors up north, essentially. That's what we always say in Florida. A bunch of Yankees is what we sold it to, okay? And so then, but those people didn't want to come down south to do anything with the land. So what he did was he had them lease it back to him. So their input was the asset. And then he put trees on top of it, orange trees. He managed the cultivation of those trees. It was really big business back then. And then, sold the oranges. And then all the profits went to the landholders according to how much percentage ownership they had in the entirety of the land, right? So he didn't go like, okay, plot one belongs to you. I sold 36,000 oranges off of plot one. You get the revenues from plot one. No. He said, this entire set of acreage, I sold this many oranges. We're going to divide it out according to how much you put in. And this whole process, they said no, because that's 100% selling a security, because you got a bunch of people that are pooling assets together for the purpose of then arbitrarily getting a shareholdership or a stake of revenue. That's what the Howie test is. Okay, now let's look at what proof of staking is. With proof of staking, with the Howie test, you sell the land to the owners. Proof of staking, you sell the crypto to a bunch of individuals. Then with the Howie test, owners lease it to Howie. Okay, what's happening? You're lending it over to Coinbase so that they can give it to the validators, right? And then Howie sat there and made a bunch of trees and basically tried to generate revenue off of it. What happens with staking? Coin lends it to a bunch of validators, and the validators give you a bunch of revenue for it, not individually, but as a big, gigantic pool. And then landowners sharing the profit as a pool of the assets. You, the individual who has staked your coins, benefit from the fact that the validator has a gigantic pool. That is 100% going to violate the Howie test. And that's why everybody that came at me today on Twitter, I was like, no, friend, let's just go ahead and go through what it is. That violates the Howie test. And that is just this particular thing that is stated in the press release. I believe there's other documents where they're making very specific comments towards fairly well-known, well-traded coins that also pretend like they're not a security, such as Mana and stuff like that, not picking on them, where you're actually legitimately selling land and it looks identical to this, quite frankly. So just so you know, that is the Howie test that everybody is talking about. Hopefully that was crystal clear. Okay, the rest of the release talks about a few other things. I'm just going to highlight what I did in red. Okay, Coinbase allegedly failures deprive investors of critical protections, including, these are the ones, I should have highlighted this, rule books that prevent fraud manipulation, proper disclosure, safeguards against conflict of interest, and routine inspection by the SEC. Now, routine inspection by the SEC, there's tons of brokers that are routinely inspected and somehow manage to slip through. So I kind of get why people are unhappy. Rule books that prevent fraud and manipulation, they likely and potentially could prove that they're doing it just right. I don't know, but honestly, I wouldn't mind someone taking a look and making sure that you are in fact getting best price. And the reason I say that is I have talked to so many people that are like, I don't know why the bid ask is so wide. It doesn't even make sense. Why is it that I can get this execution over here, but when I come on Coinbase, I get this ridiculous execution that's a joke? So that would be part of the rule books. Additionally, one of the other rules that's a real thing, and I don't know, like I wouldn't mind having the SEC check this out, is book order entry. like who gets first, who gets second, and who gets third. It's supposed to be relative to who comes in first if we're following SEC rules, if you're offering securities or trading securities. I don't know what they're doing because they're crypto unregulated, but I'm fairly sure that in those cases, they can probably prove it out that it's fine. Still wouldn't mind having a second pair of eyes on that, is what I'm saying, okay? Given how wide the spreads are sometimes. All right. Coinbase never registered its staking as a, and then the big thing is Coinbase never registered its staking as a service program as required by securities law, again, depriving investors of critical disclosure and other protections. You know, here's the thing. Is staking as a service offering a security? Heck yeah, I just showed it to you, right? Like, come on, it's going to be really hard to argue that in law. Did they deprive investors in any way, shape, or form of critical disclosures and protections? This one, it'll be interesting to see, but I actually think the SEC might be right, because the way that I heard most people talk about staking your crypto is as if you're getting an interest rate on it. It was not as if that you're doing kind of this partial returns off of validation. Additionally, it's unclear to me that most people realize that their actual ownership of the coin is going to someone else. And if that's someone else, if that validator is a lying liar sort of thing, what exactly is it that makes sure that you get your coins back? All of that, doubtful that I think that Coinbase's customers really understood that they were putting up an asset in a particular way. That I think is fair, but I'm not a lawyer. They will argue it out, but that's where the SEC is coming at them aggressively, and it's for them to prove differently as relates to things. Let's see what else. Then they just basically take a pot shot at Coinbase, fair and square. It is what it is, right? You can't ignore the rules because you don't like them, because you prefer different runs. But then this sentence, as alleged in our complaint, Coinbase was fully aware of applicability of federal securities law to its business activities, but deliberately refused to follow them. That you kind of have to break into two parts as well. Were they aware? Yeah, they were, for sure. I mean, I think people have conference clips of Coinbase representatives being very clear that they understood the laws existed. The real question is whether, given what their conversation was with the SEC, that they thought that it was going to work to file whatever document it is. That one, Coinbase might be able to clarify next time they report earnings. If I'm fair, I don't know the answer to that. And it's a possibility that that's what actually happened. There's two sides to every story. That said, you are kind of arguing with the SEC, so it's not the easiest thing to win. So that one, if I'm being honest, or if I'm being unbiased, that's kind of the deal. Okay. And then the next paragraph down, the SEC, tells you where they filed it, states the Securities Exchange Act that is being violated. And then it says the complaint seeks injunctive release, disgorgement of ill-gotten gains, plus interest penalties and other equitable relief. So I'm hoping that in the main document, everybody will know what that disgorgement means. Does it go to the SEC, or does it go to the clients of Coinbase that may have had some strangeness going on? We won't know until we know, or maybe it's clarified in other documents, which I'll hopefully get to later this week. And that's really it. That's the press release in a nutshell. Hopefully that's helpful. Now let me see if there's any questions. Super chat is broken. I know that sucks. I just worked all week to try to get even the basic stuff working again in Google. I had this weird thing that happened to my account. Long story. But I appreciate that you support me, Grandpa, nonetheless. It's nice that you're here. Thank you for all the positive things. Okay, let's see. What are you saying? I'd like to see how it is without the SEC protections. Seems they're the one behind all the problems. All they want is control. David, listen, they still have the opportunity. Look, the point, when it comes onshore, the SEC has to do its job, right? I mean, look, health inspector, not always the nicest person, still has to do his job. Coinbase could stay offshore. Binance, like, just for the record, Binance only has 2%. Or not 2%, single digits, because I think I saw it one way and then I noticed that it was a different way, and then I noticed the third thing. But it looks to me like Binance has some kind of single digit exposure to the United States, such that, and there are other releases with respect to Binance that show very clearly it knew the US was going to be a problem. There's some, I'll have to dig through my notes, but during the FTX stuff that I covered, he was talking, there was a couple of things where he was like trying to get Binance to be a certain way. And Binance was like, no, because I want to poke the SEC in the US. It kind of demonstrated that CZ knew that this wasn't going to fly in the US. And so I think as a result, his strategy has been to kind of like navigate around it and do other countries. And as a result, by the way, Binance has like 10 times the market share of Coinbase. So if Coinbase had focused all this energy overseas, they might have a different experience and not have as much exposure to the US. If you want to have a VPN and do it offshore, knock yourself out. All of this is not about is Coinbase, should it exist, should it not exist, should exchanges exist, whatever. This is about if the exchange exists and it's in the United States, well, it ought to be regulated by the United States. That's the actual thing that's going on here. So don't believe all the people that are trying to pretend like this is some attack against crypto. No, it's an attack against crypto doing stuff onshore that they shouldn't be doing. Do it offshore all you want. SEC doesn't care about that. So let's see what else we have here. If it wasn't you're right, Corey, it would be the CFTC depending on what instruments were on the exchange. And for a long time, there wasn't a question of whether these guys ought to be regulated, which is why I'm so surprised everybody's so intense today, is whether it was more about, given these coins that we all know for sure are not utility coins. There's like 3 types of coins. I'll do a video sometimes. Utility coins are just, we know they're securities. Okay. We know they're securities. The Howie test now, the idea that staking your coin is a security, to be fair, that actually is a little bit new to me, but now that I think of it, it is pretty obvious that staking your coin is a security when you look at the Howie test. But the other coins, they don't even come close. Like, you don't even need to look it up to know that what they're doing is passing through revenue a certain way, the same way that you are giving upside participation for you giving them an investment, but you're calling it revenue instead of net income. I'm not confused when I read your white paper, please. You know what I'm saying? So you're right, Corey. If it wasn't going to be the SEC, it was going to be the CFTC. And as much as people hate on regulation, the fact is in FTX, Ledger X gave you your money back because they forced, aggregation or segregation of accounts. Sorry, I was saying it wrong. The segregation of accounts, it enforced all these things that we have, such that if the actual parent company blows up, you can find what your assets are, where they're at, or if they blow up in a particular way and the underlying company. So, okay, let's talk about this for a little bit. Ledger X had to demonstrate custody of your assets in a particular way. I'm gonna use that word custody, but I think there's a different word that sometimes they use. As a result, when Ledger X blew up, the assets that were held at Ledger X, at FTX on the US onshore, all mapped back to who they belonged. Okay. What they're saying is that we need you to do that, Coinbase. Now, Coinbase, like I said, in fairness to Coinbase, I remember vaguely that the reason that they hadn't done it had to do with the filing documents and some of the other stuff, what have you. Nonetheless, here we are. Do it onshore or offshore, but that's why the SEC wants you to do it onshore, is then they can at least map back the assets to who they belong to for Americans. Hopefully that clarifies that. I don't know if I'm doing it yet. Let's see. I like how they can sue Coinbase, yet it took this long and allowed I agree with you, Trevor. Now, in fairness, when you file to obtain funding via the public markets, what they really want you to do is just have appropriate disclosures. And by the way, even adding more weight to what you're saying, Trevor, Coinbase wasn't just like filed by the SEC, like private offerings, by the way, are also regulated by the SEC unless they take an exemption, depending on what the nature of them is. Okay, so the private guys that all the private equity firms that focus in on crypto had to slide past that as well. Okay, so it's not just a one, and it's not just so I just want to throw that out there. But you are in fact right. That's the thing that surprised me this most, is how passionate people were, despite the fact that this is a known outstanding issue. Now, a few people got upset with me because they're like, well, Coinbase, but what about the short sellers? Listen, I ain't thrilled about the SEC and how they do the short selling stuff, as you guys know. I'm like, finally, you did what you're supposed to do as relates to the exchanges. Now, if you can, if people ought to know onshore versus offshore and what that really means. And if you have a VPN and do it offshore, no shade. Seriously, I get it. There's a lot of reasons why, especially, I've got people that are listening from all kinds of countries. There's real reasons why you want crypto. That's why I'm saying this is an attack against crypto. This is an attack against exchanges specifically onshore. So great question. I'm glad you sparked my ability to talk about that. I appreciate that. Okay, look, that's going to play out how it plays out, Grandpa Barney. It's unbelievable because I don't get the impression that they feel bad about it at all. And I think that's a little bit weird. They ought to feel a little bit bad about it. Do I think Coinbase? That's the thing. Now, Corey, I'm short. So, I have a bias on this. If I was to argue against myself as passionately as I could, the one thing is that, they might still have a decent business offshore. And then it becomes something that's outside of my knowledge base, which is how do you have, technically, you can have a company that operates almost entirely offshore and still trade on an exchange. So examples of that would be, there's a couple of casino companies that are not ADRs. They are actually listed in the US. And typically in the casino business, almost all their holdings are overseas. Okay. Then there's also the cruise liners. Most of them are organized in Bermuda, not in the United States, for reasons that have to do with being able to fly. Why did I say it that way? Take the boat everywhere. So, there's some places where if you take a boat, you're flying American flag. That's not ideal. And that is what it is. Look, very American. So that is what it is. So Corey, I'm not sure is the answer, but if I was to argue against myself aggressively, that's what I would say. Good question. Because I was wondering that I was trying to think through those types of questions myself. Okay. That's all the question, guys. And we're at 30 minutes anyways. I don't want to try to make these too long. Good luck in these markets. It is nuts right now. And